Well, this looks really similar. Look at my two blue arrows I have right here, and also the yellow trend line that I have that goes all the way to the yearly high and all-time high of the S&P 500. You can see here the first blue arrow, we had a massive rally in March. This is the big one, just ripped away shorts and everything. And we had one day where we had a very strong daily close above this yellow line. After that, we fell all the way down to, well, honestly, all the way down to the yearly low of 3,643 eventually, with a few mini rallies in between, but still went all the way down to here, all the way up from 4,600s. Now, this is the second time we've broken above here with one daily close. So that begs the question, will we have history repeat itself, or will bulls continue up higher? So bulls continued higher today after the CPI data showed that it actually was slowing down. We saw a decrease, even though it's still at 8.5%, which is a lot. It was a decrease from where we were previously. So the bulls took that and were able to break out of this long-term trend line like I showed you guys in the intro of this video today. Now, there are a few key things that we do want to see kind of going forward here. First of all, we are still in the supply zone that I shared with you guys all the way back when we were like around lows, around 3,800, 3,700 roughly. We had this big supply zone because it acted as a previous demand zone back here in February. You can see 3 times plus a double bottom, a very strong double bottom before the big rally we had. It acted as a key demand zone here. So it's between 4,160, which was my original price target for this upward leg, at least where I would get out of my longs. And then also we have 4,220 roughly on the top end of that. And that's from this line and pivot specifically over here that I got back from January 24th of this year. So this is a key supply zone, and bulls, if you are a bull, you definitely want to get above this level and have especially a weekly close above. So the reason I say weekly and not a daily in this case is because last time when we had a daily close above the key level here, it actually was rejected soon after. So you really want to see a weekly if you want strength going to the upside, especially now because we're in this rally and everything. There is a potential for a fake out to the upside, and because if you did have a fake out to the upside, that could mess up a lot of bulls. Ideally, if you're a bear as well, you want to actually see an aggressively bullish candle, which may sound counterintuitive, but again, in the past, when you see an aggressively bullish candle like this after a big rally, that tends to mean that, hey, this could be all the short sellers kind of getting squeezed out for one last time before downside resumes. So is that what's going to happen here? It doesn't have to work that way. I personally am waiting for, well, you guys know that I'm bearish for the fall. I'm not going to go into my thesis on that. That's separate from my role here at Cheddar Flow, but I am looking and eyeing certain levels such as 4,220, like I just shared with you, and also 4,240. This is a key resistance that we had previously on these 2 days before we had the double top, which, by the way, 4,308 is another key level if we were to get up to that point. Am I saying that's going to happen? No. However, I'll draw it for you here right now to visualize it. However, you do have to just be aware that anything can happen in the market, and I've said it in many videos. This rally that we have right now is going to go further than I even expect. I've said that before in the video. You can fact check me if you want and go into previous ones. I'm fully aware of that, and because I'm aware of that, I'm adding time onto my long-term short positions with my puts. So this isn't something that just collapses. It's not like we were just melting up and then it suddenly collapses overnight and just continues down really hard with like a crash or anything. When you have strength like this, and this is very strong, by the way, this rally is very strong. When you have strength like this, it takes a while to actually correct itself. You'll see some spikes down and then pops up and then down and up. Consolidation, in a sense, in a wider range before it actually starts to fall down, if that's what it wants to do. So you need to be aware of that. This isn't something that falls overnight, like I just said. So there is a wide range to the upside, and the more shorts that get in here and want to short this in the near term, the more they're going to end up failing and have to cover, which just means the rally is going to go higher. So these are just some levels for you to notice going forward. Again, 4,240, I really like this level, and then as well as 4,307 for this double top. This was a very key resistance. It acted actually as a supply zone up here. You could see previously in January, end of January here, we had like 4 days in a row where this acted as a demand zone. And then also this was the big rejection before falling very hard after we had FOMC in May, on May 4th. So these are levels to note going forward here. This is just a massive supply zone from 4,160 to 4,300. Now, we still can continue up, but it's going to lead to a little bit of chop going forward from up here. So something to note, and definitely keep an eye on it. The next thing I want to bring your attention to today, which is August 10th, if you're watching this in the future, this is a lot of put flow that we had today. This is no joke. We've seen a lot of put flow in July, and a lot of those probably did get squeezed out during this rally. July was probably one of the only months, if we look at the chart here, that those big bears that we saw continuously hitting the tape all the way throughout February, March, April, May, June, etc. July was probably one of the only months they really lost on their positions. We've seen them have to roll a lot of their positions to the September dates and even October, as you can see here, after hours now. However, something to note here, because they've been more right than wrong this year, and you can back test it just based on our historical flow tab if you want. I've personally done it. They've been right with a lot of these moves. You have to remember they're not catching the exact high or anything. It does take a little bit of time to play out sometimes, and other days they're right the day before it actually falls over. So there is a discrepancy there, but that's trading for you. We have seen a lot of these October expirations like I assumed we would see. I shared that in the last weekly recap video, or the week before that. I said I would assume we'd see a lot of these 1021 expirations going forward, and here we are right now. 7.9 million in premium is a lot. 1.9 million in premium is a lot. This is 10 million roughly just for these two orders of 399 strikes, so it is out of the money quite a bit there. And then I'm assuming these are also at the ask or above the ask. Yeah, they're above the ask. So these are key orders right here. But then again, throughout the day we saw tons of puts. You can see down here 5.2 million for the 390. This one's an interesting order to me because it is a much further expiration. We're seeing November 18th getting hit for the 390s for 5.2 million. It's not the traditional 916 or even the new 1021s getting hit. This person is thinking, okay, I'm bearish on the fall. I want to make sure I could profit, but I'm not sure when this rally will end, kind of like me in this case. They're not quite sure where the rally will end, and they know it have a corrective process up here, especially in the month of August. So they're choosing the 11/18 expiration. Again, we also saw a lot of December ones today. We saw 12/16 here. This one wasn't as large an order, about a million, but we've seen a lot of December 16ths in the past, like a couple days here. But again, 9/16 still hitting the tape. This is just a lot of bearish flow. That's what you need to note here, because today was a lot more than we'd seen previous days, especially today. So interesting to note, especially with this breakout here. Doesn't seem like bears are that scared of the breakout or the fact that they kind of got squeezed out in July. They're still hitting the tape with these. Same exact thing with IWM. We saw a lot of put flow on this today here. So you can see 2.8 million, 2.7 million, 2.7 million, a lot of the big money puts hitting this, and they've been very successful with IWM as well. So this is something to note, especially when you have a big breakout day like this and you see this much put flow on IWM and especially SPY. In the past, that means we're knocking on the door of that reversal happening, and they do have time on these, like the after hour ones, 1021. They have time on this. They can wait for throughout the entire month of August if they need to. Obviously, if they just keeps going up, then they probably have to roll it or cut. But if we're consolidating within the range I just shared with you for the rest of August, or at least till the end of August, they can hold these and be totally fine because they have time. They're not going to get burned on theta, kind of like these 916 orders. So interesting to see that these 1021s are starting to hit the tape more frequently, especially this week. So note that going forward. Another thing with that, dark pool levels here, you can see in our feature, the dark pool level feature, we saw 2.5 billion worth of premium in signature prints today at 411.29. So if we go to the SPY chart here and go to where this actually is on the chart, you can see here 411.29 is right around where we saw a lot of prints last time of 2.7 billion during this consolidation phase back here. And then also, this is a key level because it was the pennant before breakout, and I'll go to the 15-minute chart to show you guys that pennant. You can see here the pennant, and we did see a lot of these prints hitting the tape around this level, lower end of the pennant. So this is interesting to note because we are very high in this rally. One could argue because we gapped up so much that this was a buy in the dark pools. I personally want to wait for more confirmation. It could by all means be a buy in the signature prints for 2.5 billion at 411.28. However, sometimes we see fake outs to the upside after large dark pool prints or signature dark pool prints, and then we actually see it fall back down, and then it goes under, and then we realize, hey, this was a sell and this was just a big fake out to the upside. So I want to wait Definitely for the weekly close. Remember, today's only Wednesday, so by Friday at close, I'd like to see where we close at. If we're still up here, maybe even go higher throughout the supply zone I was sharing with you earlier, then this is probably ending up to be a buy, and that's a good level to note. We do want to see, especially if you are a bear, a lot more of the prints up here in this range right now. So we'll see tomorrow when the signature prints hit the tape what they were kind of doing around the 418, 419 range because we didn't have too many singular prints here. But in terms of signature prints, 411 to roughly 415, we've seen a decent amount of prints there. Nothing too crazy like we saw last time, which I've mentioned with you before. Up here, we saw a 9.3 billion signature dark pool print around this time, and then we just collapsed off of here. So that's the kind of stuff I'm looking for. If we see 2+ billion, that's still decent, especially if you see it on a consistently daily basis. But I'd like to see a big one to kind of get that confirmation of a downside. So I'm kind of waiting on that. But overall, this is an interesting aspect to it. And one last thing here is I wanted to talk about the VIX. VIX is in the demand zone, right at the bottom of this demand zone right now. We broke below the key trend line here, which is a first since it started back in November of 2021. So this is key that we broke below, and now we're just hanging around the demand zone. I'm interested to see if we consolidate around here, if it just continues to fall down. I'm assuming we'll consolidate closer to this demand zone, but it did get hammered today, down almost 10% on the day, which is a lot for the VIX, especially how low it is comparatively to the rest of the year. So something to note here going forward, and especially if we can break 22 in the future here, that would be very big for the bears on SPX. But other than that, appreciate you guys watching this video today, and I will see you guys in the next video on Sunday.